Okay, time for the Invest Corner then. And today, Dhirendra Kumar joins us to tell us about two tax-saving funds that look alike, but the right choice could mean a world of a difference to your portfolio. Dhirendra, let's start with HDFC Tax Saver and Taurus Tax Shield, both four-star tax saver funds. If you look at returns since launch in 1996, HDFC has done better, but over the last 5 years, it's Taurus which has surged ahead. What is fueling this performance?
I think, past 5 years, Taurus being a small fund, it has been very maneuverable, and the way it has been able to change track with in the context of the market, that opportunistically as well as, and very profitably, that actually is leading to this advantage. And HDFC is a strong, well-managed mid-cap fund, so to say, or has always had a mid-cap bias, and past 5 years looks very difficult for that particular fund focused like that. And its size is also playing its disadvantages. It's not maneuverable enough. 3,100 crore fund compared to a 70 crore fund. So that, I think, odds are against HDFC in a market like this, but both funds are good, so to say.
But both funds seem to be underperforming the category over the 1 year period. What is the reason behind this, and which one would you pick out of the two funds?
Tough choice. One is a great performer in recent times. Another is something which I have thought that full market cycle, 5 year, 10 year, it does well. But I think both funds are top holdings. They're overweighting in financials through 2011. That has dragged their performance, and I don't think that scale of underperformance is significant enough compared to other funds of HDFC. And if I have to choose one, I would because in my thinking about a tax saving fund is that an equity investor investing in a tax saving fund is anyway risking, and is compromising on the liquidity and has greater appetite for assuming risk, and it is worthwhile taking that. I would go for Taurus.
Dhirendra, first query today comes in from Mumbai itself, and Pragya, that is, and she says that she's looking to invest in a mid or a small cap fund, and she's asking which is a better bet between HDFC Mid Cap Opportunity Fund and DSP BlackRock Micro Cap Fund.
Both are risky propositions. That apart, they are completely different kind of portfolio. DSP BlackRock Microcap invests in companies which are not part of the top 300 capitalized companies in the country. So, by design, it's not necessarily a real basement stocks on capitalization, but surely unlikely to be the large caps. So,
I think we've lost that line with Dhirendra, but he was talking about the two microcap funds, addressing one of our viewer queries. Let's quickly check if we've got Dhirendra back on that. Yeah, Dhirendra, please complete your point.
Whereas HDFC Mid-Cap Opportunity is a very promising mid-cap fund. And so I would say that both funds are good, and both are risky propositions. This is not and past 5 years has been very hostile for any fund in this category. If you have the nerve and if you have the patience, by all means invest in both funds. Both are outstanding funds in their own category.